All right, welcome to everybody. We're just going to give a minute or two to see if there's anybody else who will be joining us today. We appreciate you taking your time this lunch hour or lunch half hour to join us in one of our favorite topics of keeping the personal out of it. So basically, we do these free webinars every other month, and we're always open to topics that are of interest to you, that you want to learn more about. But this one is actually us helping you guys to save on bookkeeping costs by doing your best to keep your personal and your business separate. And we'll go into more detail of how that can happen. And again, I didn't get any questions ahead of time from anybody, but we will have time at the end for questions. So you can put those in the chat. But we're going to go ahead and get started. I'm Katie Lilly, the owner of Lillyfield Accounting Solutions. With me today is Erin Goodson, our Director of Accounting Services. And I'm going to go ahead and kick it over to her.
Good afternoon, everyone. So we're going to go into what really counts as commingling. What does it mean when you're commingling your personal and your business expenses? Well, any of these activities on the screen count as commingling. So if you are writing checks from your personal account and it's paying for business expenses, that's commingling. If you're taking money out of your business account and you're using it for your personal expenses or your family household expenses, then that's going to be commingling as well. If you're taking money and moving it from the business to personal accounts and you're not documenting that, then that's going to be considered commingling. If you're going to the ATM and withdrawing cash and you don't have documentation and receipt, anything that supports that, we're going to count as bookkeepers as commingling unless you can document it. If you've got accounts that you're using for both your business and your personal transactions, that's commingling. And then if you are depositing checks that you're signing for your business account and you're putting them into your personal account, or if it is coming from your personal account into your business account, then that's going to be commingling as well. So we wanted the clear delineation of what is considered commingling, and then we can talk about why do I want to keep those things separate. So why should you keep your personal and your business expenses separate? Well, the main reasons are from a tax perspective. So we as your bookkeepers, we want to help you work with your tax accountant to maximize your deductions that you can take and hopefully minimize any audit risks, right? So our overall goal is at the end of every year when you're preparing to give your information to your tax accountant, we can nicely summarize all the information you need with the supporting documentation for your tax accountant. It keeps your overall tax bill lower, and your tax accountant can easily see what deductions and benefits you've got, and hopefully you won't be audited because you've got all the documentation for your return. It also helps you reduce your own personal liability. So you're an LLC, you're an S Corp, you're a not-for-profit corporation, you've got that corporate shield. And so you want to make sure you are shielding your personal assets from any business liability. And then making sure that you have the financial clarity you need. So you're the business owner, you're the executive director, you're making those business decisions. So you need to make sure you understand your overall business profitability and your cash flow perspective. And then from your household perspective, you want to be able to do the same thing. And we at Lillyfield want to help you reduce your overall bookkeeping costs. So making sure that you're keeping your personal items out of your business is going to do that as well. And I'm going to turn it over to Katie just to dive into more of these reasons of why you really should keep everything separate.
Okay, so we're going to start off with the scariest one first, which is the IRS, of course. Nobody wants to have an IRS audit. And I had the pleasure of helping a client through an IRS audit for some years that she wasn't using Lillyfield. So I was able to kind of have a front row seat to the process. And what happens is the auditor comes in and makes a selection of transactions. And then you've got to be able to provide the support. So if they pick deposits, you need to be able to show that those were in fact deposits for the business. And if they pick expenses, you need to be able to show documentation that it was a business expense. Now, if you get through that first round of selections, usually you've passed the audit and you're good to go. But if one of those things shows up as personal, just one, they're then going to expand the scope of the audit, and then they're going to really look at how much commingling is really happening. And then they're going to be asking for actual receipts, and anything you can't support, they're going to throw out. And so your tax bill is just going to go ching, 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 ching. So that is the main reason that we want to make sure we're not commingling, just to reduce that risk. Let's just not even have that be an issue. Now, everybody knows that you can charge meals to your business, and that is legitimate. However, if the IRS audit comes in and they pick an expense, let's say it's a $300, dinner out, and you've got to present that receipt technically has to have the business purpose and who you attended that business meal with. That's what they're looking for written down on that receipt. So you need to have some type of receipt capturing process within your company. And it could be whatever. It's just that you can get your hands on those receipts. So whether it's you take a picture and you throw them in a folder, the emails that come in that are receipts, just create a folder in your emails, receipts, throw them in there. I literally have, I think I have it here. Hold on. Yeah, I have this right in my office. That's just receipts that I literally throw any of my physical receipts in there during the year. So QuickBooks Online has a great receipt capturing process now where you can take a picture and it goes straight into QuickBooks. So that's an option, but you just want to make sure that you're not just tossing those receipts. You definitely want to have them to show that if you did go to Walmart, it was to purchase pencils and legal pads and copy paper and not pet food and alcohol, right? So we just want to make sure that you guys have some type of receipt capturing program. Okay. All right. The next one that Erin mentioned was liability. So if you are caught commingling and for some reason you are getting sued, your personal is getting sued or your business is getting sued, they're going to look at everything. And if they see that you've been commingling, they're not going to deem that your business is a separate entity. And so they can then go after not only your business as the LLC, but also your personal assets as well. So we just want to keep that separate so that if for some reason you are sued, they can go only after the business because there's nothing personal commingled in there with the business. And that way it shelters your personal assets. They can't go after your personal assets. So that's a big one. The next one is financial clarity. So is your business, if you run a profit and loss statement and you've got a bunch of expenses in there that are personal expenses, how well is your business really doing? You might not know because you're muddying the waters there. Now, why does this make a big deal? So it's other than the IRS and the liability, which to me are big deals. What it does here is, let's say you're ready to sell the business, or you want to show a bank that you are doing fantastic and you need a loan. If you've got personal expenses in there, it makes your business look as though it's not doing as well as it really is. So if you've got a ton of meals in there and a ton of entertainment in there, that another business owner might want to own your business or come in and buy your business, you're not really giving them an accurate picture of how that business is doing. So that's a main one. Another one that is very fun for the bookkeepers to hear is, well, my P&L shows I'm making a bunch of money, but I have no cash in my bank. I don't understand. My P&L showed I made $20,000, but I darn sure don't have $20,000 in the bank. So if you are paying for personal things or you're dipping into your personal funds to finance your household, then yes, you're not going to have the cash there. So the other piece is if you're constantly dipping into your business to pay things that are personal, perhaps you're living outside of your means on your personal budget. Maybe your household budget is too big because you have to keep going into and dipping into the business. So you want to take a step back and say, wow, what's the dollar amount that I need to do my household, keep my household going? And what's the dollar amount that I want to see in my business? And be able to separate those. So it's just being a more responsible business owner, and being able to have that financial clarity so that if you want to bring in a partner or you want to sell your business, you can show them truly how the business is doing. All right, and then the last, which everybody loves, is just reducing your bookkeeping costs. So if your bookkeeper is having to go in there and decipher Publix and Amazon and Walmart and Lululemon and all these other costs that we see on a day-to-day basis and code them over to personal expenses or code them over to shareholder draw, every touch that they've got to code that is added cost to your bookkeeping. So if you can just take the time to create, I'm going to use this credit card for personal and this credit card for business, and try your best to do that, you would see a significant reduction in your bookkeeping costs, because they're not going to have to sit there and because right now what's happening is there's certain vendors that we always put to ask my client because we just don't know. Amazon, Walmart, Target, Publix, we have no idea if those are truly business costs or if those were personal costs. So we code them to ask my client, then we send the ask my client to you guys, then the client codes them, tells us what it is, sends it back to us, and then we go into QuickBooks and code it. All that takes time. And then of course is going to increase your bookkeeping costs. But the other piece is that sometimes your bookkeeper just does not want to see what it is that you are charging through your business. And I won't go into details of the myriad of things that we've seen charged through a business that would make our cheeks blush. But we just don't need to know that about you. We love you as clients, but we don't necessarily need to know that about you. Now, as Erin was talking earlier, one of the other ones too, that is one that makes bookkeepers go, is if you go to the bank and you take out cash from the ATM. So if you take out $500 from your business and you don't let us know what that $500 was for, then we've got to code that as an owner draw or a shareholder draw right off the bat, unless the burden is on you as the client to let us know, oh, I pulled that to tips certain people or to give a $100 bonus to somebody that was helping me. And if that's the case, that's fine, but you need to have some kind of written receipt that person received that, and that's what that was for. Okay, so that being said, talking about boundaries, we're going to kick it back over to Erin, and she's going to give you some suggestions on how to maintain those boundaries.
Right. So now you know the reasons why you need to maintain the boundaries. How are you going to do it? Well, when you're setting up your business, you want to make sure you go in and set up separate checking accounts and credit cards for that business. And generally, when you go to set up that checking account, the bank is going to ask you for the company's FEIN number that you've received when you went through the business origination process. So that's the easiest starting point to making sure you've got those boundaries. Just get separate accounts for your business and through checking account and your credit cards. And then Katie talked about setting goals, financial goals, and household budgets. So go ahead and set those up. So you want to know in 6 months from now, 12 months from now, where you want your business to be, the position you want your business to be in. And so, as Katie says all the time, something that is watched improves, right? Right, Katie?
That's right. That's
So
one of my favorites.
if you are setting those clear goals and then you have the clarity because everything is coded to your business that relates to your business versus your personal household, then you set those goals and you can watch to see that you are actually achieving those goals, or you can steer the ship as needed, right? You can reduce costs in specific areas or try to increase revenues in specific areas. You can also, you also want to make sure that you're doing a detailed review on a regular basis. So maybe you're catching those ask my client items, those Amazon receipts, Target receipts, Walmart receipts before your bookkeeper even sees them. So make sure you're going through and you're catching it. Or maybe you did make a mistake when you got in that grocery store line and you pulled out the wrong credit card. It happens. We know it. So you caught it beforehand and you just let your bookkeeper know right away. And so again, watch numbers are going to improve. So, if you're watching it, you're doing that detailed review on a regular basis, you're probably less likely to make some of those mistakes. So if you catch anything, it's not a big deal. Just let your bookkeeper know. And then, as we talked about earlier, make sure you're saving those receipts to support an audit. Yeah, Katie mentioned the QuickBooks feature. You can even, snap pictures on your phone and upload it through the QuickBooks app on your phones. It's a pretty useful feature there that a lot of our clients are starting to adopt. So just keeping that documentation, make notes on those receipts. So the January item, January prior year item, when it happened, you're going through an audit in the next fiscal year, you're not going to remember what happened in January, right? It's May in my house. It's May-cember is what they're calling it. So there's no way I remember what happened in January now with everything going on. So make that documentation and save it and get your full filing system that works for you going there. Okay. So if you're someone that is making regular payments from the business, consider just paying yourself a salary instead. So you can set that boundary of personal expenses versus business expenses. So if you're an S corp or a not-for-profit, that's going to be set up as a salary. If you're an LLC or a partnership, then consider regular draws. And so then you've got that the cash moving to your personal accounts as needed to pay for those household type expenses. And it's also helping you track, right? Track as you grow your business. And you're seeing what the salary expense should be for running your business, running your operation. And then you do want to make sure you are keeping track of your personal items that you use for business. Example there is your personal automobile and the tax advantages of using your personal automobile and deductions for using your personal automobile. Just make sure you're tracking that if it happens, if you are using it. Another example there is your home office, right? There's a deduction for that as well. So just track those personal items that are business expenses. And be sure to educate your employees if you have employees, and educate your partners too. Go back through this presentation and it will be recorded so you can watch it again. If you are working for a not-for-profit, and we've got a couple not-for-profits on the call today. So if you're not-for-profit, talk about the reimbursement process. If an employee happens to use a business credit card for a personal expense, make sure that's something that's in your employee handbook so they're aware of the policy and the procedure they need to follow if it happens. And just make sure everybody's on the same page as far as what expenses are truly business expenses. Okay. And oops, you accidentally charged something you shouldn't have. Now what happens? Well, first of all, it's okay. It happens, right? You are in the grocery store line and you just pull out a card, and I'm telling you, some of my cards all look the same, and so you pay for something with the wrong card. It's okay. Just let your bookkeeper know. You're going to want to let them know, like the vendor name. So if you went to Target and you use your personal card, say, I went to Target on this date, charge this, it's a personal expense, please count it as a draw. So just give your bookkeeper the heads up. You'll reduce your costs that way if you're on the front end of it versus them having to ask you. And if you forget and you pay for that personal item with that business account, then we're typically going to code it as a draw on the business. And so it's like a pulling out of the business. If you forget and you pay for something that's business related with a personal checking account or personal card, then we're going to say that's an investment into the business. Usually it's the other way around. Usually it's a draw in the business. And that's really for LLCs. If you're in S corps, if you're a partnership or you're a not-for-profit organization, then we're probably going to code it a little differently. We're going to code it based on that business ownership. So not-for-profit, it will most likely be a reimbursement to the organization from the associate that made the charge. And then partnership, you want to look at the way your partnership is structured. And so is it a loan from the partnership, or is it something that will be reimbursed? Okay. So again, it happens, and it's okay if it happens. Just try to stay on top of it. You're doing the detailed review so that you catch it as it happens, and you can just let your bookkeeper know.
Right. We want it to be the exception, not the rule.
Yeah. And so with that, we will wrap it up, and we have some time for questions.
So I'm looking in the chat and I don't see any. One of our participants said they love the QBO app and they snap the receipts, which is great. That feature rolled out a while back that has definitely improved, like all things QuickBooks Online has just gotten better and better and better with time. So we have quite a few more clients that are using that feature. So any other questions? Okay, Erin, you want to go ahead and announce the next webinar?
Sure. So if you think of a question later, just reach out. We're happy to answer them. But if not, so we're excited to announce in June, we'll have our next webinar. So we're planning on June 27th at the lunchtime hour at noon, and we'll go through reconciliations and why reconciliations are so important. So June 27th at noon. Yeah.
Okay, everybody, this was a short and easy one. Oh, here we go. Let's see. I need to buy a pair of Meta sunglasses as a raffle item to be used in a marketing campaign for a client. I want to charge it as an expense from Best Buy. So yeah, that would be fine. The easiest thing to do would just be to send that receipt, whether it's a physical receipt from the store or an email, send that receipt to your bookkeeper and just, with the notation, sunglasses for raffle code to marketing. That's all you got to do. And then the bookkeeper attaches that receipt and your note or your email. We do PDFs of that actual coding, and we attach both of those to that transaction. So should there ever be an audit, we can pull that right up. Great question. Awesome. Okay, everybody. Again, email Erin and I if you have any questions that maybe you didn't want to say out loud on the call. Otherwise, have a great rest of your Thursday.